Okay, so welcome everyone. I'm super happy to have you all here. This is the first webinar in the YAY Enterprising Youth Program. This is part of the Connect series. We're really happy to have you all here. This webinar is done in collaboration with the African Business Angels Network, who've been super gracious in connecting us with a number of the angels in their network. So without further ado, we're going to get started. As I mentioned before, you have your tools in the bottom of your menu where you can raise your hand or applaud if you see something you like. You can also feel free to post your comments or your questions throughout the session. We will do Q&A towards the end of the session, but feel free to post them throughout. So we're so thrilled to have you all here. My name is Claire Sterngold. I'm the manager of the YAY community, which is a global network of youth entrepreneurs. Many of you are part of this network, and we're so thrilled to have you on board today. In fact, we are super happy because I'm handing over the reins today to a number of the YAY community members who will actually be hosting this session. So Leroy Wasaru, Ian Otula, and Ifra Mohammed will pose their questions to our panel of angel and impact investors today. The questions that we feel that young entrepreneurs are really excited to hear about. So let's meet our host. Leroy Mwasaru is a Forbes 30 Under 30 entrepreneur and the founder of GreenPact, a clean energy social venture solving the problem of affordable energy. GreenPact designs and installs biogas digesters to mostly farmers and local communities. Leroy's first step to GreenPact was by designing a human waste bioreactor to support his community by providing clean, renewable energy to his school's cooks and tackling the poor sanitation. Leroy is the YAY community co-ambassador in Kenya. Ian Otula is a co-founder and chief executive officer of Vuma Biofuels, a Kenyan-based company that upcycles sugarcane waste in a sustainable firewood alternative energy product for the largest consumers of fuel wood in Kenya. A previous YAY ambassador, Ian is a young inspirational leader with a unique ability to bring people together and has been recognized locally and internationally for his work in the renewable energy sector. Ifra Mohammed is an Anzisho Prize Fellow and the founder of Supermom. Supermom taps into a network of unemployed and marginalized women and through basic financial training turns them into a sales force that distributes fast-moving consumer goods within their communities. Supermom enables companies to close the last-mile distribution gap and access bottom-of-the-pyramid customers in marginalized area while also empowering women to earn a living and sustain their families. Ifra is also the YAY co-ambassador for Kenya. And now, without further ado, I'm going to hand things over to Leroy. Leroy, over to you.
Thank you for the intros, Claire. I think I'll join in welcoming everyone to today's webinar, but not without sharing what some of our ambassadors and community members have been doing in their respective countries. Of course, taking into consideration what's been happening with the whole coronavirus pandemic. Something to chew on is that a majority, 67% of our YAY community feel like there is no institutional support. And so I'll dive into some of these leaders who are, leading despite these setbacks. So right from Kenya, we have our very own Ifra, who's using her own distribution networks to provide critical supplies to the communities that she works with. And then we also have Bashiru all the way from Sierra Leone, who's using his technical skills to enable e-learning with his country's educational stakeholders. And then last but not least, is a work I'm privileged to lead with our efforts here at GreenPact by providing PPEs, personal protective equipment in the form of masks to healthcare workers and centers. So further to this, we are still in the early stages of getting our ventilators up and running, of course, with the necessary certifications. So I trust these examples do justice to the impact that we strive to achieve, not just with the YAY community, but with our enterprises. And it's with this that I invite our dear investors who are on call today to contribute their insights as enablers in the sub-Saharan startup ecosystem. So Anne, Laila, and Roland, in that order, kindly introduce yourselves to our audience.
Hey, thank you, Leroy, and good morning, everyone, from a cold and cloudy Nairobi. It's really a pleasure to be in the presence, I think, of such greatness, and I'm very excited to get to interact with all of you. My name is Anne Juki, and I am an impact investor with DOB Equity. DOB is a Dutch impact fund that supports social entrepreneurs in East Africa. Before DOB, I worked in consulting as a consultant with McKinsey, and before that, worked as a chemical engineer in process engineering in the semiconductor space. So I have quite a different background. So operator, consultant, and now investor. Looking forward to learning from you and really just interacting together over the next hour or so.
Hi, I'm Laila Masharia. I'm really excited to be here too. I want to really thank the host and the community for having us here. I'm a lawyer by training, but I took an unusual path after that. I grew up in Kenya, Namibia, and Somalia, and then eventually went to college in the US where I trained in law. Now I work in finance, and I sit on the board of Absa Bank in Nairobi, as well as on the board of Centum Investments, which is a listed private equity firm. And in my personal time, I invest in upcoming businesses, scale-ups as I call them, and I also try to mentor and to support the growth of the investment ecosystem in our region. Thanks for having us.
Good morning, everybody. My name is Roland. I'm originally from Belgium, but now based in East Africa. Living, working there since 2017, although already coming there since being here since 2015, 2016. I'm co-founder of Jungo Capital. We invest in SMEs, ticket range 50,000 up to $500,000 in the first round. We're sector agnostic. Invite local business angels to co-invest with us. So we did the first investment in 2017, last year in Uganda, and then last year also expanded to Kenya and Rwanda. Happy to be here. Happy to hear your questions, hopefully, or looking forward to a very interesting conversation.
Thank you. Ian, over to you.
Thank you very much, Leroy, and great introductions. And to kickstart the session is our first question that many entrepreneurs are quite curious about during this unprecedented times is, are you still investing? And Roland, if you'd like to speak first, then followed by Laila, then Anne. That'll be perfect.
Yes, we are. that's the short answer. I think for many investors, as for many business owners, when COVID started, everybody started looking first at their own business. How can we cope with this? And so we did the same thing. So our first response was, well, by then we had a portfolio of over 20 companies, is kind of look at the companies that we had in our portfolio and how we should what were the best ways to help them. But the next phase was, I mean, we saw there was still maybe even more than before a need for companies looking for financing. And so first we continued looking at the pipeline that we were already developing. Those deals were approved by end of March. And then after that, we actually started looking at new deals. I mean, in an environment of reduced mobility, it was a little bit harder. A lot of Zoom meetings, like we all know, but then we still found ways to meet face to face. It took a little bit longer, but yes, we have continued to invest.
On our part, we are not deploying capital at present in my personal capacity or in some of the companies I'm involved in as far as new enterprises. However, we are continuing to really invest in our existing portfolio to try and build the resilience of the companies we're involved in and to help them really re-strategize as the COVID impact is panning out. And then in addition to that, we're spending this time to really reflect and put in a lot of the analysis and housekeeping tasks that many companies put off when they're lurching from crisis to crisis in normal times. So we're also making investments in the sense of supporting the ecosystem and helping that really do some of the work that we've been saying we want to do for a long time in the form of research, impact analysis, and the rest.
And at DOB, yes, we are still investing, but similar to what both Laila and Roland have mentioned, our focus and our priority has really been on our current portfolio, stabilizing them and really supporting them. However, we are still actively investing, and with two caveats though. One is, I think literally all of the companies in our pipeline now are based on relationships we had with entrepreneurs before the pandemic. And two, where we are investing, investment committees have basically guided us that we should think about how to de-risk the investments, particularly when you can't do a due diligence in person. So one of the things you're doing is, for example, if you have an investment of 100,000, is do it in two tranches, 50,000 based on a virtual diligence, and then the other 50,000 once you have an in-person meeting and are able to have a lot more confidence about the business once you've met them in person.
Yeah, thank you very much, Roland and Laila. And in summary, majority of investors are actually investing, and conversations are still ongoing. So keep the relationships going and keep the conversations going. I'd like to pass on to Ifra, who will ask the next question.
Thank you, Ian. Currently, the whole world is sort of like at a standstill because we're facing the pandemic of COVID-19. And as we've heard from all our investors today, you're still investing, and Anne has talked about the due diligence processes. And my next question is, what is your definition of a pandemic resilient business? And with the onset of COVID-19, how have you given increased attention to addressing the resiliency or the success of the business during the pandemic in your due diligence processes? Leila, if you'd like to start with answering that question, followed by Roland, then Anne, if you'd like to add something.
Thank you, Ifra. So the first thing I'd like to say is that it's really important for entrepreneurs not to be too tough on themselves. This has been an unprecedented crisis. The impact has been something that very few people could have foretold. And so even as we talk about what could have made your business or your strategies more resilient to COVID, I think the most important thing for all of us, both investors and entrepreneurs and our communities, is to have compassion with for each other, and to really step out in solidarity so that we can all make it through this crisis together. Having said that, I do think that the businesses that are more likely to succeed or be resilient against COVID, part of it is chance or luck. These are the businesses that happen to be in sectors that haven't been so affected by the crisis, and those businesses those sectors that are actually finding new opportunity because of this pandemic. So I'll just explain what I mean. If you're in hospitality or tourism, you might find yourself in a sector where even though you had done everything right, you're going to find yourself on the back foot and really having to recalibrate your strategies. And that is no fault of your own. It's probably, there's not much you could have done to prevent that. But then if you're in some sectors, let's say health or education, that have been affected by the pandemic, there still might be opportunities to move online and find new markets if you're able to retool and pivot very quickly. But as I said, that's not for every sector. In addition to that, there's the old rules that always apply. And these have to do with making sure that your business was being run in a lean way. You had actually validated your market very carefully before going in. You understood your unit economics, your total addressable market, and all the disciplines that come with launching a business. Those businesses will be more likely to survive the pandemic and even find more opportunities after it's over.
To build a little bit on what Laila said, I do agree. I mean, no one could have foreseen what started to happen 3 months back in time, and so whether your business has turned out to be more resilient or less has not necessarily anything to do with your capabilities as an entrepreneur. I mean, there's certain on the one hand, there's certain sectors that were less affected than others. On the other hand, I mean, if we look at our own portfolio, it's hard to generalize. I mean, these days, often the distinction is made between essential products and services and non-essential. For example, a lot of our companies are in Uganda, and we had non-essential manufacturing companies that were forced to close down because of the nature of that business, because of kind of the regulation of lockdown that was put in place. But at the same time, we had other non-essential manufacturing businesses that stayed open, that found a way to continue operating. And so what I want to say is, on the one hand, there's a context that is outside of your control, kind of the little bit of flexibility of or space you have to maneuver is kind of within that context. What is it that you can or cannot do? And so we did see that with some companies that were kind of limited by reduced mobility, by the lockdowns, that still had existing contracts that were capable of finding a way to continue at a reduced level to service those contracts. And the other piece was also mentioned by Laila. It's kind of, on the one hand, you have, how can I continue to keep up my revenue stream at a certain level? The other piece is, within these restricted contexts, how can I reduce some of the costs? How can I stretch my liquidity as long as possible to keep afloat?
Yeah, it's a really good question, Ifra, and I'd echo what both Laila and Roland have said. I think on the one hand, it's tough to have a really pandemic-proof business, because this is a once-in-a-generation pandemic, right? Like, nothing really seen like this since Spanish flu 100 years ago. And so just, I think, be kind to yourself and really don't be very hard on yourself. And at the same time, it's a good time to really reflect on what are some of the fundamentals of your business, what are some things that you can control, and where can you have discipline. So we found, for example, within our portfolio, that the companies that were able to most successfully pivot, for example, in education, or companies that were most able to resist some of the additional costs that come with operating in a COVID environment, were those companies that had quite a bit of cash at hand. But I do think that, while, like they say, cash is king, but I think ultimately revenue determines the winners. So really think about how you can improve. You use this time to improve your business fundamentals, focus on the unit economics, and just try and run a lean business as possible. Particularly because no one knows how long this is going to extend, and the recession that might come after.
Thank you so much to our investors. Thank you, Laila. Thank you, Anne. Thank you, Roland, as well. What I've learned, and in summary, is basically looking at how lean the business, how lean the business is running. I've learned from Laila that there's investment with compassion and assessing the resilience of the business, which is something that is very key during this pandemic. And I've learned that it's a pandemic, and no one knows what's going to happen next. And it's a question of still generating revenue, and in some cases luck, as Roland has touched on. So thank you so much. I'll hand it over to Leroy.
Thank you very much, Ifra. And next we have a question that is probably on the minds of very, very many young entrepreneurs, especially at this time. So for businesses which are seeking investments at this time, how have your requirements or expectations changed as investors? What are your expectations of businesses which are seeking from you investment at this time? And then a question to cap it is, are you taking into considerations that the businesses being run by young people, or maybe by a company itself young? The order in the response to these questions would be Anne, Laila, and Roland.
Yeah. Thanks, Leroy. I think the pandemic and this overall situation has exposed some weaknesses in the investor model, where we didn't have discipline. We are starting to have a lot more discipline now. And then two, it's also really helped us to refocus on the things that are really core and fundamental to a business. So what do I mean by that? So I think in the past, we could see a business that has negative unit economics, and by that I mean, let's say for every cup of tea you sell, maybe you sell it for 10 shillings and you lose 1 shilling, and we knew that over time you would scale with the right investments. You can cost you 10 shillings for the cup, but then you can sell it for 15 shillings. But now we are saying, you need to be a lot more disciplined around the unit economics. You can't lose money on every cup of tea you sell, as an example. And just enforcing discipline in things like that. Laila had talked about the total addressable market, and every other presentation I see has a total addressable market of $1 billion shillings or $1 billion. Now we're like, look, you really have to be realistic. How much money, people just don't have a lot of money in their pockets now. So, what's the really, truly, addressable market that you're looking at? I think we've also just gotten a lot more disciplined around what the business's costs are, particularly the fixed costs, ensuring that you have positive contribution margins, right? So I'd say a lot of the fundamentals have stayed the same. We're just a lot more diligent on bringing in or on investing in companies that already have a strong, disciplined mindset, because that's really what's going to be important as they scale, particularly because coming back to earlier conversation, there's been some drying up of capital in the market. So I think that's very important for entrepreneurs to consider.
Yes, I would agree with that. Everything Anne says, it's true. I would go a little bit further and just say that in addition to that, we're really changing our viewpoint across portfolios to really look at businesses in a much longer term horizon. I think across the world, many of us are expecting now that the recovery might take a while. And so we're really looking to have conversations with entrepreneurs who have a model and an approach that is going to take time to come to fruition, and really whether they are being very sensitive to the adjustments that are going to have to be made by all of us across the markets, how consumers are feeling, how regulators are going to be looking at this pandemic or changing tack because of it. So those are the kinds of conversations that we would like to have more with investors now that we didn't as much in the past.
I think for us, as an investor, our criteria haven't changed at all. I would say. I mean, across the board, you could say you as an investor, you look at the entrepreneur, you look at the track record. What have they either in their business as a person done in the past? You look at the market potential. Again, there may be a huge market, but what is your capability of capturing a piece of that? How good are you at selling? And then talking a little bit about track record goes back to the previous question and to resilience. I mean, track record isn't just about the past 3 months. It's about the past couple of years. I mean, for us, one of the minimum criteria to consider a business is they have to be already in business for 2 years, so that we can look at at least the first 2 years of how the entrepreneur has been conducting their business. But back at the past 3 months, we will effectively also look how, again, that's why I said, going back to the previous question, how resilient have you been? And again, just to repeat, that doesn't mean that you have to be one of those businesses that have been capable of thriving in this crisis. That's not for everybody. But if you're not in that spot, it's again about how have you been coping? Have you, again, existing contracts, how have you been dealing with those? Or if you were forced to reduce operations, how have you been managing your costs? That's also part of your current track record. But overall, I would say our criteria haven't changed, and that's also why we continue to invest.
Thank you very much for those insights. If I was to do a recap, I'd say the main themes that come up are discipline, landscape orientation, and track record. So I think that's something our audience who are joining us today should have in mind as they're navigating around the enterprises. And to take this conversation into perhaps a deeper view, I'll invite Ifra to take on the conversation. Ifra, over to you.
Thank you so much, Leroy, and thank you again to our investors. I appreciate the emphasis on discipline and resilience, especially during this pandemic. I have a two-part question as a follow-up to what Leroy and I previously asked. So the first part, I'll direct it to Dr. Laila. As a social entrepreneur, I've realized, especially during this pandemic, our work has sort of broadened with the pandemic. We've had to, bring in new things, support the communities that we work with in terms of education about the virus, and increase masks and donate water, especially in the dry areas that we work with. And I was wondering, as a social entrepreneur, a young social entrepreneur, how do I and other young entrepreneurs package our narrative around impact to attract investment?
Yeah, that's a great question. I think as a world, as a planet, what this pandemic has done is it has us all thinking about interconnectedness and the role of all sectors in actually moving our what would I say, our population forward. So I think that social enterprises are uniquely placed to be able to tell a story that links this idea of profit to social impact and making a difference. I think investors might be much more open now to really a story that explains how you will be bouncing back from this pandemic as a business, but in a way that really makes a difference to people's lives, not only because it's the right thing to do, but also because the recognition is really growing that you cannot grow a business in isolation. You've got to have consumers who are thriving and able to pay for your goods and services. You've got to have growing economies and populations that are thriving if there's going to be consumer confidence. So that interconnection is really important. And if you're able to tell that story of how you're advancing through your commercial growth, the well-being of society around you, I think you'll find yourself well-placed and appealing to investors who are seasoned.
Thank you so much. Thank you so much. I'd like to go into the part two of this question and ask Anne, followed by Roland, just more generally, how should we be adjusting how we package our narrative during this time, especially to access capital or to attract more investors? As you've explained, you have been investing mostly in the people that you already have in your network and helping them with the resilience, as Roland has talked about. But generally, how do we package our narrative? Everybody talks about, how to attract investors, but in your opinion, and followed by Roland, how should we package our narrative to attract more capital?
Yeah, sure. I mean, I think that the idea of a narrative is very interesting. It's a bit like it's a double-edged sword. Because I hear a lot of people talk about it, but sometimes I worry that there's too much emphasis on it. And I would say a narrative is a bit like, if you think about the car, the narrative is the body. It's nice, it's shiny, it's sleek, gives you some nice aerodynamic capabilities. But I think ultimately the car needs an engine to move, and the financials and the fundamentals of the business that we've been talking about are really the engine of the business. So a narrative in itself is not important. But it's a nice shiny exterior of the car, but you also need an engine to go with it. I think having said that, when you think about the narrative, it's really important for us as an investor, for me as an investor, to see that you truly understand the environment you're operating in. And for me, a strong narrative is to say, this is our base case scenario and what the business looks like today. It's probably 30%, lower than budget or lower than last year. We also have a best case scenario, which is we recover quickly from COVID, and a worst case scenario, which is, we're at 10% of where we were last year. So I think, thinking through scenarios and being as realistic as possible is to me a much stronger indication of how well you know your business and how well you're packaging yourself than just glossing over everything and saying, everything's okay, you're not affected by this, and we'll be perfectly fine going forward.
I couldn't agree more with what Anne just said. I mean, it's definitely a double-edged sword. The one thing I would add is kind of I mean, it's hard to. I mean, yeah, maybe we shouldn't even use the word package, but I mean, there's not a single way to address an investor. There's not. I mean, you have everybody here has their own business, and you have something. You're selling something, and whether that's your customer or your potential future investor, you're selling. And so, but not every, just like there's not a single customer, there's not a single investor. So again, how you sell your business is you have to also look at, just as you look at your customers, what they need, and whether your product, your service fits with what they're looking for. It's the same with the investor you're approaching. Not every investor, from an impact point of view, what the question is about, is looking for the same thing. So I would say my advice is, before you approach an investor, look at what they're looking for, both from a return point of view as from an impact point of view, and see whether your business strategy and impact thesis fits with that. If you think there's a fit, I mean, then you can start thinking about, how do I communicate best my message? But there might be a lot of investors that, by doing that homework, you will find out even before talking to them, saying, well, there will never be a fit. And so sometimes I feel like entrepreneurs forget about that. You kind of start looking for a way to still be able to reach out to someone. There will never be a fit. And so that packaging story is completely unnecessary at that stage. So again, in short, do your homework, see whether there could be a fit, and then it's probably way easier, or the packaging exercise will probably be less necessary, because you're both looking at the same thing for the same thing.
Thank you so much, Roland and Anne. I've had a lot of discussions before about how sometimes an investor might not be right for you. So thank you, Roland, for talking about research before and finding out what it is they're looking for, and then maybe even discovering that they're not a perfect fit for your business at the time. And thank you, Anne, again. My key takeaway is, again, quoting you, narrative is like the bodywork of a car. It looks nice on the outside, but the engine underneath is really what makes the car go. Though, again, from my experience, and I'm sure other young entrepreneurs in this call have experienced, a lot of times you have to kind of make the outside look shiny for an investor to even look at it, you know, just to have your attention at the beginning. But it's good to know that then, you know, the body, the engine is what's important, what drives it. And thank you so much for that insight. I'd like to now I'd like to invite Ian for the next question.
Thank you, Ephraim. To our next question is, what advice would you give to a company that has figured out the right market fit and is experiencing a proven demand for its product, but still unable to raise the necessary financing to expand and grow, either through stringent investor requirements or a mismatch in criteria? I'd like to start us off with Roland, then Laila, and then
Anne. That's a great question. I would say also, well, going back to a previous answer, it's kind of the key importance of track record is if you can, I mean, telling that there's a market is not enough. The best way you can convince an investor is step by step being able to show that you can sell effectively to some customers in that market. And so it might be that you meet with an investor and the investor thinks you're not really there yet, but he's interested by the story, by what you're trying to do, by the market that you're trying to target. And if kind of every 3 months you manage to give that investor an update, telling him or her that you've captured that many more of that market, it will continue to raise the interest of the investor, bringing you closer to the point that the investor says, well, yeah, you are effectively doing something. You're showing progress. You're showing that it's not just a theoretical market, but that you're capable of capturing part of that. and so again, track record is I would say is key to convincing an investor. The second point I would like to add is maybe a little bit of a warning, based on experience over the past couple of years. Is what a lot of time happens with businesses that are at that stage, is that instead of focusing on building a track record, they're maybe focusing a little too much of participating in accelerators, and some businesses go from one accelerator to the next accelerator, which is not necessarily bringing them closer to an investor, and is not necessarily bringing them closer to focus on conducting their business. So while an accelerator might effectively teach you a couple of things, it doesn't necessarily help you to raise the interest of an investor.
Yes, I would agree completely. I think in addition to that, it's really important for you to think if indeed your business is progressing, you feel like you have a market. We always say that the best investors are really your customers. Revenue is the most affordable source of capital for growth. So if indeed you have a market, you're growing well, you should just continue on that path and see how far you can get with revenues. Investment is not a must, you know, and in addition to that, you need to think very carefully because every investment comes with a cost. And it's important also to know whether the investment that you're seeking is really the right solution for your business. So I would agree that sometimes you can get quite caught up in chasing financing that might not be exactly the right fit or be coming at the right time.
Yeah, thanks, guys. It's I echo that fully. So you know, two things. One is, as Roland mentioned, you know, stay in touch with your potential investor. If you have traction and you have progress, just let them know. I know we talked 3 months ago. I know we talked 6 months ago. This is what we're doing now. And I even mentioned earlier on with regards to the question on are we still investing? You know, at DOB, we're still investing, but we're really at this time just focusing on companies and entrepreneurs where we had relationships. Some of those relationships are 6 months long. Some of them are 2 months long, where 2 years ago we told someone we wouldn't invest, but we stayed in touch with them, had a coffee or spoke every 3 or 4 months. And now, in the midst of a pandemic, we're investing. And the reason we're investing is because it wasn't a good fit 2 years ago, but now the business has grown. They have strong unit economics. And now it's a really good fit for us to invest. This is probably a terrible analogy, and forgive me if it is, but it's a bit like dating, right? With investing, you really have to get to know each other, figure out, is this the right match, and so on. And then the second thing is that I think in the same way that as a business, you have customers and you're looking for investors, investors are the same way. You entrepreneurs are our customers. And we also have investors to whom there are certain targets we need to reach, and there are certain requirements that a lot of these investors have of us as the fund managers, whether it's with impact and what the returns are. So really get to know, as Roland said, really get to know the investor well and just understand what type of an investor is this? What are they looking for? What's most important to them? Are they looking for, you know, pure revenue growth so they can, you know, sell the shares in this business after a number of years? Are they looking for a balance of profitability and revenue? Are they, you know, really impact fast and also, you know, profitability driven? You know, the people who've invested in this investor, what's important to them? Is it a you know, a DFI development finance institution who's here for the long term? Is it, you know, other investors who are here for the short term as well? So just really get to know your investor. And there are very many types of investment. It's not always the right thing to take on, you know, equity investment where people come and buy shares. Sometimes it's debt. Sometimes you want to do grants, but they all have a cost. Even free money is not free. It costs you a lot of your time, right? And really, as Lila said, you know, very early on in the business, you know, revenue is probably the best investment and the best source of cash for your business.
I'm going to quickly, if I may, quickly add to Anne's words. on the building relationship. I mean, what we both said is kind of keep in touch, tell about your progress. But again, that's the positive version. There's not always progress. So what to do in those cases, and then I can relate it back to my own experience. When we started, we were also fundraising, and so sometimes there's investors that you want to approach, but that that kind of it's not going to be the right fit now, but it might be the fit in 2 years. So at that point, it's kind of a lesson, or a hard lesson for myself was, it's kind of don't approach. I learned not to approach them from an investing point of view, saying a kind of, hey, look, I learned a little bit about what you're doing, and I think there might be a case to collaborate in the future, but we know we're not there. We know we're not there yet. So I'm not approaching you to raise money from you today, but I want to learn how I should get there. And so it's kind of, as an investor, you do not want to say, it's not nice having to say no. You don't like that. And so you provide the investor with the opportunity, not having to say no. On the contrary, you kind of showing that you did your homework, that you're interested in them, and that you want to learn about a potential relationship in the future. I doubt there will be many investors who will deny that to you. So it gives you an entry without you being already in that place, but still to start building that relationship.
Yeah, thank you very much. Quite some lessons in there, and just to summarize it, we're learning that your track record is very important. It doesn't really matter whether maybe the fit is not there at the moment, but it's something that you can always develop and continue to keep your potential investors updated and of your progress or lack thereof. And as Anna's mentioned, I think I agree with the analogy. It's not too terrible, but it actually makes a lot of sense. It's like dating. It might not work now, but 2 years down the road, it might actually work. So keep your investors updated, and about your progress. And I think there's a lot of lessons in that. Thank you. I'll pass it on to our next question, which is by Ifra. So Ifra.
Thank you so much, Ian. Thank you. Really, really great insight, guys. The next, I'd like to ask Anne to explain how can startups cut the fat, so to speak, and run as lean as possible, especially during this pandemic?
Yeah, that's a good question, and a tough one, and something that I'm struggling a bit with now for some of our businesses. I'd say one is, with regards to this discussion, but then even just generally as an entrepreneur running a business, is that it's really important to have a lot of grace and empathy for the people around you, and even as Lila said, to have compassion. And always, I think for me, a key principle I've always considered is that everything is negotiable, right? And there's always, different levels to which you can make decisions, right? So it's rarely binary, all or nothing. But even when it comes to cutting costs, think about, what are some of the fixed costs of your business, and how can those be reviewed? And again, you have different scenarios, right? So maybe in your best case scenario, if you have a lease, your rent stays the same. In a base or medium case scenario, you negotiate with your landlord and get a 30% reduction. In a worst case scenario, negotiations don't work, you downsize, everyone's working remotely, or you have the smallest space possible, right? So really always think about, like, what are the factors and like the degrees of variance I have, and how can I negotiate? But then two, and what I think your question is really asking, is sometimes you have to make tough people decisions. And it's never easy. I know people in my life, my family members who've been affected by the pandemic and lost jobs. And so it's never an easy decision to make as an entrepreneur. But again, like what's negotiable? It's rarely all or nothing. Can you ask people to start off with a 20%, 30% pay cut? If that's not possible, then, first of all, start by example, right? So take a pay cut yourself if you have to, And then after that, you can cascade it down to the organization. If you have to lay people off, then communicate well, be very transparent with them, show them these are the numbers, this is why I have to make this decision. And also think about who, if you are laying people off, who are you laying off and why? There could be people who are very strong culture carriers in your organization, and it's not very expensive to have them. They're not core to the business, but they're such a strong part of the culture. Maybe you keep them, right? And then there are people who are, core to the business, but they're not a great fit with the culture, right? And maybe you have to think about those trade-offs. But whatever you do, just have a lot of empathy and kindness with the conversations you're having.
Thank you, Anne, and thank you so much for touching on compassion, which leads me to delve deeper into this topic. And Laila, you mentioned compassionate investing. Obviously, cutting the part means laying people off, as Anne has mentioned. And I'd be interested to know what tips you would give a young entrepreneur to handle anxiety and mental health, especially during this pandemic, as laying off includes laying off people that are important to you, as Anne has mentioned, family members, sometimes good friends, sometimes really important stuff, but then due to the circumstances that we're currently facing, is something that you really have to, do, especially at this point for sustainability and to keep the business running. So Laila and Roland, if you'd like to add something, please.
Yeah, I'd like to pick up the thread around mental health and support for staff. One of the things that's happening this time worldwide is that a lot of people understand what's going on, and they understand the pressure on businesses to stay afloat. It doesn't make it much easier when you're directly affected, but at least it gives a sense of, it provides an opportunity for you as the business owner to be much more collaborative. So the first thing I would do before even getting to layoffs, as Anne has said, is really be collaborative around solutions. So the first thing I would do, though, before even getting there is really make sure everybody has counseling. Make sure there's a cycle of predictability and certainty around connections. So in one company I'm involved in, we're very deliberate about having a weekly touch base with the whole staff and just having fun and being together and being open around communication and saying, we really miss you guys. And really recognizing the fact that it is very, very difficult for people to absorb everything that's happening. So it's not just the pandemic, it's the economic anxiety that's coming with this worldwide, as well as this question around, so there's the health challenge, then there's the economic challenge, then this is transition to working from home and having, in many cases, to retool and reskill yourself very quickly. So you've just got to really be very compassionate around making sure people have the support that they need to weather that. When it comes to pay cuts and or going to part-time or using leave, there's many different things that you can do to try and keep people on board before you get to layoffs. But even in that case, I think there's a lot of material online around actual specific tips about different ways to think about this. But for me, what I find is very important philosophically is just to be as transparent as possible and as collaborative as possible. So as soon as you have information as the senior management, share that information, have people get a sense of rhythm and certainty about what's going to happen, because everything is so tumultuous that to the extent that you can give some predictability, and even if you say this is the pay cut that we're making, this is how long we can commit, that at least you have this income for this long. And this is what it means as far as we know about your job, so that people have some sense of planning. I even know some companies that are being because of the uncertainty, actually making deeper cuts in the short term so that people are able to work safe for sure through the end of the year, and they're able to plan even at a lower level rather than waiting and making a different decision every 2 months as more information comes in, which can make people feel very destabilized. The last thing I would say is that as you think about this, your senior management and yourself as the founder are likely to be going under an incredible amount of pressure, because what happens in these times is that we're so concerned about the younger and the juniors and the people who might not have as much control or information, which is the right thing, as it is, as they've said, as Anne has said, maybe taking the pay cut yourself, which is deeper than the others. But what happens is, because you're in such a caretaking role, it's very easy to forget that you yourself are undergoing an incredible amount of pressure. And just remembering to take care of your seniors, to take care of your founders, and to remember that all of us are human and that we're all navigating this together.
Well, there's not much I can add. I would only say, I think having to make tough decisions is part of the resilience. Treating your staff with respect during these tough times is also part of the resilience. So these are things, again, I would say from an investor point of view, that any investor will look at if they should take an interest in your company. So treat the people like you would like to be treated yourself, and an investor will look at that.
Thank you so much, guys. Thank you not only for addressing this question and also sharing what you are doing currently as well. In summary, the key points that I've gotten from your answers is cut smart. We all want to emerge okay. Be wise in understanding what resources to deploy. And from previous answers, just don't overperform or overspend during this time. Can spend a lot of time learning more about your business. Thank you so much. I'll hand it over to Leroy.
Thank you very much for having that part of the conversation, Ifra. For me, I'd love to take on Roland with the overarching theme of track record. So my question is, what role do investors have in supporting youth entrepreneurs who are often exceptionally vulnerable to shocks in the market? To support these ventures, do you provide any additional services like mentoring, technical assistance, or other forms of support beyond investing? How can youth entrepreneurs learn about and get access to these services? Because we see just like a baby figuring out their first steps, they're more susceptible to falling within those first steps. So how can we best support this baby? Roland and Naila, in that order. Roland.
Thanks, Leroy. Yes, in our case, we do. I mean, so we invest in, I would say, relatively small SMEs. So like I said before, minimum time they have to be in business is 2 years. So a lot of times it's still pretty young companies. And part of the reality is that we often see is that many are still not 100% investment ready, and that doesn't kind of scare us away of wanting to deal with these companies. So we have kind of our own pre-investment process. We even have, so Jungo Capital is our investment company. We have Jungo Excel, which is kind of our own organization that does a quite intensive pre-investment process with each company. And that goes from rebuilding financials, fine-tuning the investment plan. We start building what we call basic management control systems. So it takes about up to 6 months. And so it's basically, on the one hand, building the information together with the company so we can do due diligence. And then second, getting to the point that we can confidently make an investment decision, trusting that once we wire the company with continued support is ready to operate with that money. So yeah, the technical assistance part is important. And already from before we make an investment.
Yes, so I think in some ways this goes back to the point we've discussed before, that you really have to know your investor and approach the right people. So it's very likely that an investor who will invest in an early stage business, is going to spend a lot more time with you on, as Roland saying, like helping you redo your financials and refine your business plan. But some later stage investors, like for example at DOB, you know, we'll do a bit of that with you, but we sort of expect most of the work to be there. And sometimes, if you're lucky, you'll find someone on the investment team who has the time and the capacity to be able to do that with you. But you know, frankly, with us, then it's you know, as a small team, and we make slightly larger investments, and it's going to be tough for us to be able to do that. I think, having said that, though, to answer the second part of your question, Lyra, I think the role that we play, for example, as DOB is providing technical assistance once we've invested, to say, look, we really like you. This is a fantastic founding team. We think you have a great business. You have traction. You've showed us you have a really good track record. Let's invest some time to get, you know, let's give you a technical assistance grant, and have a consultant come in and really help you build the governance systems, you know, really help you put the controls in place that can really solidify you as a business, and then really set you up for the next stage of growth. So I think really understanding the type of investor, what they'll do, will they invest time in you before investment, or spend time with you after investment, is important. I saw a comment here from one of the participants, Muketsi, I believe, that says a lot of startups are over-mentored and under-invested. I think there's a lot of truth to that, but I think there's still a lot of mentoring that needs to happen early on, that comes with investment. So think very closely about who you take money from and why. A dollar is fungible, right? A dollar from Anne is the same as a dollar from Lila, a dollar from Roland, but you know, what else comes with it that really is able to add value beyond the capital?
Yeah, I agree with everybody, but I think what's coming out for me in this is really the importance of understanding the investor landscape. There are some roles that are not for investors. And if you're a young entrepreneur, it's important not to see your eventual investor as the end all and be all, as far as being your mentor, being your incubator, being an accelerator, being everything, right? All of those are different roles. They're played at different stages. There's a reason why some angel investors are called fools, right? They have a way that they approach it. They say it's friends, families, and fools. Basically, these are people who are taking a lot of risk because you're at a very early stage. It's not every investor that will look at companies at that stage. So just be aware of these different categories. So sometimes when people say we're underinvested, sometimes it comes from people not understanding what the range of investors are. For example, at Centum, where I serve on the board, we invest in the private equities end of the space. You really have to be quite a mature company, very profitable at a certain level of scale, and will invest a certain amount of money that cannot be the majority, you know, depending on the case. And once you understand those criteria, you understand that that's a completely different kind of business, perhaps, than your own. So that sophistication in trying to make sense of what these different investors are and what they do might help bring some clarity for which one is really a good fit for you.
Thank you very much for those insights. You know, if I would take all of them, my biggest takeaway from this is know your investor first of all before you can approach them. And it's also a good thing to know that some of the investors as well have newborn units, so to speak. A very good example that has been given by Roland and Anne, what they do to kickstart young entrepreneurs who are approaching them, who might not have very mature companies. With these insights, I'll give it over to Ian, who will take us on to the next and final question. Ian.
Thank you, Leroy. And this is our final question before we move into Q&A. And I'll start with Lila, then Anne, and then Roland. And that is, do you have any final piece of advice or encouragement that you'd like to give our young entrepreneurs during this period?
Thanks so much, Ian. I think for me, I would just like to encourage people to help everybody internalize what a tough shock this has been. and that there's quite some risk at this time for people to personalize this impact and think that this means all kinds of things about you, which is really not the case. So I just want to reiterate that. But at the end of the day, it's to remind you as an entrepreneur that you are the asset. You are whatever this experience brings with it, and whatever we learn, whether it's good or bad, whether it's succeeding or some failures or the need to pivot, all of that expertise is consolidated into the person that you will be in the future. And the advantage of being a young entrepreneur is that you have the luxury of a little bit more time to absorb these questions, change course if you must, reinvent yourself. Look at all these experiences and see what they say about your growth and what talents or skills they have brought on board. Remember that when we talk about a seasoned entrepreneur, that word seasoned is actually shorthand for somebody who's been through very hard times and somehow managed to bounce back with those skills and insights now as part of their persona. So a lot of investors actually look for people who have been able to make it, not necessarily in their business, but as an entrepreneur through hard times, because that tells you a little bit about resilience, about grit, about character. So keep going, it's going to get better, and we're all going to come out of this together, probably in a different form, but still standing.
Yeah, thank you, Laila. I would just to build on that, you know, 2 or 3 things. One is no matter what, just be kind to yourself. None of us has gone through this before, and hopefully we don't have to again. But I really encourage you to be kind to yourself. There's only so much that you can control. You know, second is that if you can use the time to invest in yourself, think about which skills that you just didn't have time to invest in. We just given the business and the hustle and bustle of life. And maybe this is a time to, in the same way your business can pivot, maybe it's also a time to also just pivot how you think about what's important to you. You know, get in touch with your family and your values in a socially distant way, of course, but just really, you know, really spend the time to invest in yourself in the same way that you might think about investing in your business. And then, you know, lastly, I know a lot of times it's easy to have your identity tied to your business. So, you know, Anne is DOB and DOB is Anne, and, you know, whatever the case may be. But it's also, I know a business can be a strong part of your identity, but don't link the ups and downs to your business to the ups and downs of your life and yourself. If your business succeeds, that's great. If it doesn't succeed, that's also part of the journey of life. And I hope that, as Laila said, you can take these lessons and continue to be a stronger entrepreneur and a better person as well.
Building on Anne's words, I mean, yeah, be kind to yourself, and there's so many things you don't control. Kind of a next point that comes out of that reasoning is kind of be also realistic, and not everything we all do is gonna work. And so sometimes, on the one hand, you need to be an optimist to be as crazy as an entrepreneur. We all are. At the same time, you need to be a realist. And so, kind of 2 cents of advice is set targets where you want to be in 6 months from now, in a year from now, and kind of evaluate yourself against those targets. You might be there, great. But if continuously you're not there, you also need to make tough decisions. It's part of kind of looking back that sometimes you stick too long in things that might not work. So you need to be able to make that decision, and it's not a bad decision. It's simply part of what you can't control. And so never take it personal. I mean, if you put hard work into it, I mean, you should never be afraid of making those decisions. It's just part of what's going to happen at some point for you to be able to make the next step. Lastly, I would say, bringing it back to the role of an entrepreneur looking for investment, I think I mentioned a couple of times before, always do your homework. An investor will appreciate it, and it will always be first step of starting to build that relationship. No investor will, I mean, as an investor, we never deny a cup of coffee with anybody. If we can see that you did a bit of homework, that you really show interest, I mean, it will be so much easier to start opening that door.
Thank you very much. And I'll summarize in one sentence, just in the interest of time, and that is be kind to yourself, invest in yourself, distinct yourself from your business, and always know that there's room for failure, and it's not necessarily a bad thing. So thank you very much, Laila, Roland, and Anne.
Thank you very much, Ian, for holding it up. And you can imagine the amount of questions we have from the insights which have been shared. We have now a brief window to share some of them. The first question I have here is from Njokozo from South Africa. So, pivoting versus resilience, is there a difference? Our best bet is on entrepreneurs that continue to make revenue. I think he meant is our best bet on entrepreneurs that continue to make revenue even in these times. So because Anne and Roland have been particularly insistent on Anne on the body work versus the engine work, and Roland on the part where on the track record. I'd love for Anne, Roland, and then Laila to add up on what she thinks about this specific question. Anne, please.
Sure. I think it's yeah, it's not an easy question. And who asked the question? I wonder if they are they want to also just see if they maybe just to understand a bit more. I don't think I'd love to understand better what they are struggling with, because I don't think pivoting versus resilience is an either or. Sometimes you do have to pivot to be resilient, and sometimes you also just don't have the luxury of cash to pivot as much. So it's a tough question to answer without knowing a bit more of context. But sometimes being resilient means you follow a different path than what you started off, and continue to make adjustments as you go.
Thank you.
I would say there's probably more ways of being resilient than to pivot. I mean, as in this crisis, I would make the comparison with there's certain sectors that are essential for which it's easier to thrive on this crisis. So majority of businesses, majority of sectors don't have that luxury. I would say majority of businesses neither have the luxury to pivot. It's not all of a sudden because this crisis happens and you're limited in your range of your product offering that all of a sudden you can find a twist to that and kind of make the best of it. I think a minority of businesses is capable of doing that, not because they're smarter or more creative, but simply because they have a certain service of product that allows for that. And if you have that, sure, it's part of your resilience to make the best out of that. If you do not have that, it doesn't mean that you cannot be resilient without pivoting. Pivoting is I would say it's a luxury in these times that probably most don't have. Well, it doesn't mean you cannot be resilient.
Yeah, thank you. Laila, please.
Yes, I don't have much to add. I agree with everybody. Resilience means anything on earth to survive, right? And so the range of options are very many. I even have a case where in a turnaround, somebody completely disaggregated the business into its parts and ended up finding a way like to sell assets to pay all the debtors. And then they continued the next year in the same business, but they almost starting afresh. But everybody still had their jobs the next year, but they had to really kind of go back from where they had reached. So yeah, it's a resilience. It's really what you say it is. But for me, it's just about making sure that the investors get paid somewhere, and to the extent possible, everybody keeps their job. So very broad range of options within that.
Thank you. I think I'm loving the clarity we're now having on what a pivot is against what resilience really is. And I think for me, resilience is according to this conversation, seems like working with whatever little you have, and where else pivoting looks like you might need a couple more resources to take a different direction. So thank you very much for clarifying on that and also answering that question. So I think I'll hand it over to Ian.
So our second question comes from Muketsi. I hope I'm pronouncing that right. And the question is, why don't African startups raise capital in Africa? Why is 80% of the startup funding coming out of Silicon Valley going to US-based entrepreneurs? I think I'll ask this question first to Roland, then Laila, and Anne, if you have anything to share, please feel free.
Well, first I would say it's
Roland
probably
ended up in the hot seat. Huh?
that's the beauty of online communication. I'm far away. No, I mean, yeah, in all fairness, it's probably not true that 80% of funding comes out of Silicon Valley. It is probably true that not enough funding comes out of Africa. But then I'm probably not in the best position to answer that question. And Laila?
And do you want to try it? Or, well, okay, let me just jump in. I guess there's a sense that we're doing some research at present to try and get these numbers as a start to be quite clear. Because before we make very sweeping statements that we've been seeing kind of rolling around in the media, we'd like to have a very good sense that we all agree what kind of investment we're talking about, what is VC funding, which is rare across the world. Very few people qualify for that kind of funding or find it to be the best fit, even in other countries. So we are doing some time. I had explained that during this time, a lot of companies and ecosystems are taking this time to do some research and some housekeeping. So we are going to be starting an initiative very shortly to really get at the statistics around here. Around this topic. We do think that there's a lot of investment that goes to what you would call indigenous firms from indigenous investors that doesn't get captured in the same way that you would capture VC funding, because that kind of investment doesn't lend itself so much to media and press releases and road shows and some of these very public ways of raising money. So in addition to that, we really want to get a sense of whether there's reasons why funding is allocated the way that it is. Is it something to do with pitching? Is it bias? Some people think that's all it is. But before we can get into this conversation, and we're going to make it quite collaborative and broad so that we can get past this place where we are as an ecosystem, where we're saying this is the case, but nobody's able to really substantiate it or analyze it in a very clear and fair way so that we can then go from there to the next step.
And Laila, in this case, when you say we, who's doing this research and what's the audience?
So I don't know if you've seen that there's some new press releases that have come out even in the last few days, right, around this topic. So what's happened is that there's a technology entrepreneurs group that is actually part of the target of this conversation, because VCs are mostly targeted on that sector. And in this group, what's happened is that there's some of the funding community as well, some of the VCs and impact investors who are coming in to help us kind of tease apart these concepts so that the analysis is clean. I can tell you a bit more about it offline so we don't drag everybody through this, yes. But that's the community we're looking at, mostly tech investment and tech-enabled businesses.
Okay, no, thank you. And I think that would be great to just see the results of that, because there has been a lot of discussion, I think first in private circles and then second in the media about this. And I think a lot of it is just coming from, I think, a just and right space in these conversations around race and inequality, starting off, in the US with the murder really of George Floyd, And that's really also brought about the question of accountability. And I think in the investor space, that is a very sometimes opaque space that has room to be further examined. And having said that, I think it's the right question, and I don't have the answer, but there is, I would say, a lot in the system that's broken. There's a lot of asymmetry with regards to both the sources of capital and how the capital is deployed. So I don't know. All I will say is that the system is broken, and just on many parts along the value chain. And hopefully some of the work that folks like Laila and there are a couple of other initiatives happening that can really help shed more light on this, and even what can be done to fix it.
Thank you very much, Ketsi. The jury is still out on this, and just a quick question to Laila is, can you share when the report will be out and whether we can access it and how we can be able to access it?
Once we're ready, it will be publicly available. I'll make sure it gets into this network specifically, but it's going to take some time because we want to be very, very thoughtful around the way that we kind of cross the T's and dot the I's. And we'd like to tease out the different factors that are affecting what is clearly a phenomenon that everybody's saying is a problem, but it's quite a multi-headed hydra, like getting at it and trying to see, causation and correlation are not the same thing. So it's going to take a few months, but we'll make sure that it gets well publicized and that it's something that's very collaborative in the community, so that it's well owned.
Okay, thank you. I think Ephraim, I'll hand it over to you.
Time. We don't have time on our side, so I'll ask a quick question from Jacob in Tanzania. It's a very interesting question. As Iungo Capital, DOB Equity, in your capacity as an angel investor, Laila, Jacob is asking, why did each of you go into investing? So if we could start with Anne, then Laila, then Roland can finish us off, please.
Yeah, sure, happy to. Yeah, I think one of my passions is really around, we're talking about narrative, but really the African narrative and supporting entrepreneurs. And I looked for an opportunity to do that is the intersection of, one, a passion for social entrepreneurship, two, a fairly analytical mind, I would say, and three, also fairly risk averse. And so I thought about how can I get into the social entrepreneurship and really just the entrepreneurship space, in East Africa, in a way that capitalizes on, on my strengths, and then, allows me to, explore my interests. And I'm probably not as a bigger risk taker as many of you entrepreneurs. And for me, the intersection of those two or three things was really investing and impact investing. And compared to the other, previous careers that I've had, I really love. It's very people oriented. It's very very analytical, and just allows me to truly support entrepreneurs like you, achieve your visions and walk through the journeys together.
Well, for me, it's really around my life mission. My goal, how I want to use my life, is to improve the lot of not just Africans, but humans, and help them fulfill their potential. I originally started my training in planning and public policy, and then went to law school. And at that time, I was very much in the human rights community. That's where my roots are, in the development community. But then I went through an experience that is, too long to go into now, but it shifted my view to seeing that we're all trying to do the same thing. If you want to lift millions of people out of poverty and to put them on a trajectory that is sustainable in the shortest period of time, the way you do that is through jobs. And so my life is really about creating as many jobs, decent jobs for people so that they're able to live in dignity, and then to pay it forward into their communities and get everybody at an economic floor, and then start building independently as people and as families and as cities, as countries. And that underlying that is what gives me this real urgent passion for investment at many different levels, just to get money into communities and people generating wealth for themselves and those they care about.
In my case, I think this has been a passion of mine for almost 20 years now, and that's basically I think I only believe in market-based solutions, and then tied to financial services. I mean, in the past, I was in Latin America, and a lot has already been done and written and developed about microfinance, but not necessarily about agricultural microfinance. And so I was in an area where it was unexisting, built a microfinance institution, managed it, sold it, then gone into this SMEs. I mean, there's a lot of SME financing, but there's certain segments and certain types that are hugely still missing. So whenever there's kind of a challenge or a lack in the market that that is not fulfilled around financing, I kind of get excited and start thinking there must be a solution in an entrepreneurial way.
Thank you so much. Thank you so much for not only answering our questions, but also sharing your insights and thoughts. Claire?
Great. Thanks, Ifra. Thanks, Ian. Thanks, Leroy. I am just closing out this session as we're actually over time. We had so many questions in the chat box. I'm really sorry that we were only able to get to 3 of them, but as this session was led by young entrepreneurs, we hope that we've actually put forward many of the questions that you would be interested to know more about. If you want to stay up to date on other webinars like this, you can create a profile on Yay Community, and we'll send you weekly updates on further webinars that are happening on a variety of topics. As well, if you really have a burning question that you feel didn't get answered in this session, please send an email to youthandtrade@intrasend.org. We'll take your question and pass it along and see if our lovely investors can answer that question for you. And thanks so much to Roland, Laila, and Anne. It's seriously been a pleasure. I think we've had so much insights shared throughout this session. As a really kitsch moment at the end, I'd like everyone to turn on their camera so we can quickly take a screenshot with as many people as possible. I think it's really nice to actually, we have so many names on the screen, but we don't necessarily have faces. So it'd be really cool if we can see everyone who's here, get to know you. Thank you so much for being a part of this. It's been amazing to have you all here. Okay, or if you're all ready, smile and say cheese. I'm gonna take a quick screenshot. There we go. Cool. Thanks, everyone. This has been awesome. If you enjoyed this, put a clap reaction up so we can see that you want to hear more of insights from the investors, and we'll definitely keep you updated. I see hands coming up. Sorry, guys, we're already over time. So please send your questions to youthandtrade@intrasend.com, and we'll try and get to those. Thanks, everyone, and have a great morning. Bye.
Thank you, everyone.
Thank you, everyone. Bye.
Cheers, everyone. Bye.
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 Bye. Thanks, everyone.
Yeah, bye.
Yeah, bye.